All right, so today is the 23rd of August, 2023. It's 6:30 a.m. on um, Eastern Standard Time. And we have this trend line that's been broken. That green line is the 50 moving average. This is the 200 down here, and this is the VWAP. The purple is the VWAP. Now, it's like I said, it's pre-market. I guess London's still the session of London, whatever. So, um, with that break of the trend line, I look at this 1, 2, 3 reversal as here's 1, 2, 3, and when it broke that low right there, it looks like it could go on down. I would say the stop would have to be above this candle right here. And let's see, that would be it's 44.18, and the high on this candle is 44.20. That's not bad. That's only 2 points risk. So it's about $100. So it should go down at least to this to the VWAP. Now here's another 1, 2, 3, but that's kind of a tighter um, trend line break. This is the bigger move, and that's what I was looking at. So let's go to the 15-minute chart and look at that real quick and kind of see what's going on. So the last few days it's been going down, down. It's gone up, and this was yesterday. And I did a video of yesterday's too. With the pre-market was up, and the regular session, U.S. session, was down. Uh, who knows what it wants to do, but it looks like it's turning bearish. And the reason I say that is this is the MACD right here. The crossovers happen. The DMI has happened, and that's a very bearish sign especially after that. So in the DMI, I like that a lot. The blue is above the cream color, and it just went for a long time. It wasn't squiggly like it is in here. Here it's squiggly. I try to stay out when it's in that kind of a zone right there. I call it spaghetti look, or spaghetti, whatever. Um, but after it's been a long time here in one direction and then crosses, I think it's going to go down a little bit. Probably at least probably to the VWAP, maybe going down to this is 200 on the 15. Let's get back over the 5. And I don't want to burn too much time on it since it is pre-market, and it may totally bounce right back up, but that's risk management. So let me see here. Okay, I'm going to freeze it. Okay, folks. So it's about 11 minutes have gone by, and here is that drop below that low right here. And that low was, I said before, 18. It is down at 13.5 right now. It is at the 200 moving average on the 5-minute chart. Everything is looking very bearish. The only concern I have is I go to Forex Factory and look at their forexfactory.com, and they cover everything, not just Forex, but their news announcements is what I look at. And at 8:30, they have one that's really coming out, and it's consumer confidence, but it says, or no, that one is core retail sales, but it says it's really, I don't know if it's out of Canada or whatever, it says CAD on it. And so got news at 8:30 that may affect it. And then we have retail sales there, and then we have 9:45 is flash manufacturing PMI and flash services PMI. So that's coming out at 9:45, and then at 10 we have consumer confidence and new home sales. So that could affect it too. So really, if I was in the market right now, and in my other videos, I said I'm taking a little break right now, but this is still what I do. I mean, I watch charts. I look at what trades I usually make and should make, and here is what's going on. This is for my benefit that I can look back on this video and see what my thought process is and all that. So, as I said, it's still bearish, but with a twist. If I had more than one contract, I would definitely take one off now and get at least was that 5 points, $250. But as I said, it's going up. I would probably put the other one back up, a stop up above maybe this high right here, or either break even, because it has a good chance to go back up and test that low right there and stop you out. Maybe put a point above that, line right there. So that's something you're going to, where I have to just figure out as it goes and how I feel at the time, just by watching the market. Everything is turning down, and you want to cover your profits. So probably break even would be the smart thing, or maybe a point above. Don't worry about the one tick. I should have not a point, but a tick, and maybe two ticks. So I will come back and see where we stand in just a little bit. Okay, I just wanted to bring up something too. Here's the book map. They've put some liquidity here at 44.10, 140 orders in there. There's liquidity back up here at 26. But everything's looking like it wants to go down right now, and that could change. But here's more liquidity down here at the 402 level. And that's what they say is the liquidity, meaning there are orders resting at those levels, and the market usually wants to gravitate towards that area of because that's where trading will take place. So let's go back over here and look at this chart. This is the entry point below this low, and so you got in right here, put your stop above that high. Also, I will bring up a point where on this 1, 2, 3, if you'd taken it, or if I had taken it, it'd been that 1, 2, 3, or it's an M, I guess, and sell below this low. Everything was kind of lining up. You had good volume to the downside. Everything was breaking low. The only thing is that, like I said, that was a tight one. And I would have gotten stopped out on this because the way I traded is the breakthrough candle is, or I usually put a 2-point stop is what, and I guess if I'd had that, yeah, let's see, 21. Yeah, I would have gotten stopped out because I like to put on that piercing candle that goes through that and put you in the trade. I like to put my stop above that candle, like over here. When this one puts you in, that was the candle, put the stop right up above that. And usually if it's going to go, it usually won't come back over to that part. But if it does, it's got you covered with a small loss. So that's what my rationale or my reasoning was on that point. But like I said earlier, here's the book map. It's going down 410 is where the and there's not a lot of this is where the liquidity is. There's not a lot of trading going on in pre-market like this. I like the pre-market. It doesn't move as fast as the regular market, but there's some gains that can be made. And sometimes that moving fast, you got to make quick decisions, and that's what I've learned over the years. I can pick out things real quick because I've looked at charts since 1989. So now back then I was doing paper charts. We didn't have this stuff. We had to use Wall Street Journal or Financial Times or Financial News, I guess it was, and you had to order these 2 booklets, and I was trading corn and wheat and soybeans and all that kind of stuff. So anyway, I don't want to bore you with that. I'm just kind of reminiscing here if anybody's paying attention. So I'll come back if anything's going on. So I'm back, and look where we are. I had to take my dog for a walk in the park. So man, that's kind of a good thing is if you can put your stop in where you feel comfortable with it and let it go and go walk away from the computer for a little while. That's a good thing to do. So you'd be up at least, and probably I would have done a take profit at 10 points. Usually on the daytime, and you got to kind of figure out what's working at the time. But like yesterday, 5 points seemed to be where you could get out and take a profit. Today it just happened to be 10. So I would say, if you get 2 or more contracts, take out at least one at 5 points if you can get it. And that way you're locked in profit for real, or solid. And then just find a good place to put a stop above, probably above the VWAP, like right on that candle. So, like I said, I'm not in this trade. Don't want to make anybody think I am. And but this is the way I trade. These are the things I look for, like that trend line crossing right there with that pattern, that 1, 2, 3 pattern, and all this other stuff setting up at that time. So yeah, you'd be up well over $600 right now on one contract. So I'm probably going to take a break for now, and after the market opens, I'll come back and probably go over something. I only have about 5 minutes left on this video, and we'll see what happens here. All right, so it's 7:39 Eastern Standard Time right now, and this is the 15-minute chart. By the way, this is the emini, and it's moving back up to the 200, heading back up. But look at this; all this is still so bearish. This is the DMI here and the MACD, like I said before, and all of the moving averages are pointing down, so that's why I have that little line. I'll show you real quick on the 5-minute. 15-minute, I like to use it a lot to kind of guide me. But here, look at this. I think, well, it's already broken that one. I think it's a good entry right now to break below this low, this candle. Then your risk is only from this low, which is 06 and a quarter, up to 08 and a half. That's right around 2 points. Now, what it really needs to do is break that trend line, and it may not, but here's what I like about this is the 5-minute, and the DMI is still looking very bearish. You have the this is the 8-minute, eight period time frame is that blue line, and the 5-minute, 5-period moving average right there with it. Everything's bearish, and let's come back and see what happens. I may be totally wrong on this. The safer place to put that is let it break the trend line, but I think it was probably worth the risk to jump in on that one, but we'll see. I'll freeze it and come back. All right, so this was the good choice, it looks like, to take that. Excuse me, by clearing my throat. I know it gets annoying. So it broke the trend line, and what I like to look at is the book map. So all this liquidity over here, 02's got 163, 01's got 100, 98's down here, 147. Everything, look at nothing up here. It's attracted down to the heat, folks. So 95 is 213. So I've got about 3 minutes or 2.5 minutes left on this. Let me come back with if it breaks through, and we'll see what happens here. All right, so it looks like it wants to go up to that. If you keep your stop above that high, you still only have like a 2-point risk. It could be turning around to go back up into this area, maybe go up and hit the 20. But if you just got out of break even, you'd already be stopped out with no loss, no profit. But just throwing that out there. I guess it got rejected from all this heat down here. They had enough buyers in this area to push it back up, it looks like, but not sure yet. I think it's going to be kind of an iffy place here. But if it breaks that high, it just got to wait for the next trade. So that's it for that little piece. Okay, got about a minute and a half left. It looks like I would not be buying this market, even though that's a little 1, 2, 3 reversal. But this is too far apart. These lines right here. Now the MACD has already crossed over, giving it kind of a bullish signal, but everything is still pointing down. We're under the VWAP, under the 20. I just wouldn't. I used to always just go ahead and buy that, and sometimes it wins, sometimes it wouldn't. But I would have probably taken that short below that low, and then just most likely I would have moved my stop down to break even, like to that point. But once it started this one, but I would have gotten stopped out. So even if I kept it up here, I would have got stopped out. So no big deal. Just isn't looking right for me, and to get in again on this. And so, like I said, I'm not in. This is my week of kicking back, or not kicking back, but stepping back and studying the market and doing what I would normally do. So we're talking about it. So anyway, I'm about ready to wrap up. I've got, like I said, this is a 15-minute time frame on this video. This is for my personal use, and I appreciate it if you watch it and get something out of it. This is not trading advice. I'm not a teacher. I'm not a professional or anything like that. So hope you have a good trading day, and thanks for watching. Please subscribe to the channel if you like it, and we'll see you in the next video. Take care.